Hello, traders. This lesson is going to be on risk sentiment analysis. Kind of to recap what that is, it's just basically what is the market feeling like? Is it a bull market or a bear market? Is it people feeling like it's long or people feeling like it's short? In stocks and stuff, you have volume reports, and options you have volume reports, which you can go by, and open interest reports. Now you can't do that in the spot currency market. But what you can do is you can use the future for currency market as a reference. There's a report that's released called the Commitment of Traders Report by the CFTC. They're the ones that regulate the futures market. And the reason this is helpful, it is a futures market, but a lot of times, especially speculators that are taking a position in the futures market are also taking a position in the spot market. So what is the COT report? Basically, it's a report of the futures market for commercial and non-commercial traders, larger traders, and basically saying, are they long this position or are they short? Are they long this currency? Are they short this currency? And then how much open interest is in it? To access this, you just go to, we'll start from the beginning. So you start with cftc.gov. Then you go to market reports, down to commitment of traders, and then to get like a basic outlook on it, you can just go down here, go down to current legacy reports. Then you go to Chicago Mercantile Exchange, and then you can go to Europe and all that stuff too. But we're just going to go to Chicago Mercantile Exchange, go to short format. Now to find what you need, in my browser, this is Chrome, there's always a search option where you can search page for certain words. Right now on Chrome it's Control F. So I'm going to push Control F, I'm going to push GBP for pound, and right here this is the COT report for the pound. Non-commercial, like I said in this, are like speculators. And as you can see, there are 31,000 positions short and 89,000 or long and 89,000 short for non-commercial. Commercial is the opposite. You have over 130,000 contracts for long and 60,000 short. And there's a ton of open interest. This is basically contracts that have not been fulfilled yet. There's a yen. You can see the same type of numbers. And just looking at this, if you look at it, I think these are released every week. Just come in every week and see how they're changing. You can kind of get an idea of how the market sentiment's changing. More people going long or more people going short. This page is the history. I think. Let me remember how you got here. I gotta remember. I think you go back to the main part and you go to commitment. No, thank you. Go back to the Commitment of Traders report from the market report, and I think you go to the de-aggregate. The current traders and financial. I think it's right here. No, that's not it. Anyway, just maybe mark that down. This will give you the history. I can't remember how I got there, but this would basically give you the history. Like I said, all of 2012, all of 2011. You can download it into an Excel file, which I have in my house, but I'm not in my house right now, so I can't show you that. But what you can do is download it, put into an Excel file, and then rank it in ascending order from highest to lowest. And then you just do you group it into like different means, right? Or medians. I don't remember the statistical name for it, but you can do it like a stochastic. So you mark the highest point and then the lowest point, and then you put an 80% mark and then a 20% mark for each report. Also, here, I didn't say that exactly right. So let me show you with a notepad or WordPad. So you take the large amount of speculators, which is this number right here, the non-commercials, okay? And so you take the aggregate amount of this minus it, and then you aggregate this, you know. So you do 31 minus 89, 133 minus 60,000, right? So we can do that. Let me real quick. So you would go 31,000. We'll just round, okay? So it's easier to do the math. Minus 90,000. 123. Okay. And this will give you your net. This is just do your own little indicator if you'd like to. Hold on, let me get. I have a ton of programs. I'm sorry. Accessories, calculator. Go to just one calc. So 31, 123 minus 90, 123 equals negative 59,000. Negative 59,000. And then you do the same for the commercial. So it'd be 134,000 minus 60,000. So, and I already closed that. Let me just do this. Oops. So 134, 123 minus 60, 123, 60, that's 6,000, one more, equals 74,000. Equals 74, 123. And then what you do is you subtract negative 59,000 minus 74, 123 equals, we just add them together, right? Plus 59, take them to negative 23 equals, so negative 130,000, or was it 133? Yeah. So, and you do that for each week when you download that data from the text file in Excel, and then you rank it from the highest to lowest after you do this math. So you'd have, you know, if you did it for 1 year, you'd have 52 of these, and then you take the highest and the lowest, and that's the top of your range, and then you find the numbers that are within 80%, like so the top 20%, and then the bottom 20% of the range. And what that gives you is it gives you basically a stochastic indicator. I'll show you. So let's say you had a range of, we'll just do it, 200,000 or more, 200,000, and then the bottom was negative 200,000, okay? So that's a difference of 400,000, right? Or yeah, 400,000. So so that is 80% of, so 50 would be 0. 1, 2, 4, 40,000, one more, and then so we'll just times this by 0.8, right? That'll give us the bottom part. Is 320,000. So be the top, basically the top 80,000 of this. So it would be right here, and this would be the top 80,000, 200,000. So it'd be 120,000, right? Yeah, and that's the top of the range, the 80% mark, and then you go the same thing, 400, 1, 2, 3, and then you times that point by 0.20 to get the bottom. And so that's going to be 80,000. So that, yeah, easy enough. I'm being retarded about it. So it'd be negative 120,000. Right? And so, I can't draw freaking straight lines. Okay, I have to do it the best I can though. So right here, that's like, say this is stochastic. This is the very top of the range. If this is, I can't make a straight line, but you get it. For the bottom of the range, this is the very top of the range. This mark right here would be overbought conditions. This mark right here would be oversold conditions, right? And then basically you'd have, you know, a line that kind of went up and down. You know, you'd have it that went like that. And then it'd come back the other way. Right here, you know, and just kind of do this thing. It's not exactly like, but it's an oscillator, you get it? So you can build your own oscillator as a long-term indication of risk sentiment by doing this. By doing the simple math I showed you. Sorry, there's a huge train going by right now. Just give me a second. There's an easier way. That's like if you want to do it by yourself. Now, this is timingcharts.com. So right now I have the British pound up, right? And what you do is you put the COT numbers on there and choose your symbol and you can go to Canadian dollar too, right? And this is for futures, right? Put the COT on there. I don't need that up there. Okay. And then this is those are weekly numbers, okay? So basically, I do need that because I can't remember the color coding on it. Oh no, it's right there. I don't need it. So, like I was telling you, you take this number minus this number. That's kind of how they're getting the sentiment, this little sentiment analysis right now. So it's highly bullish. But basically, what you're looking for from this website is just you want a lot of divergence between the green line and the blue line. Because when you get divergence, it's a sign of that basically it's a reversal sign. As you can see, the market was flat for a while, but you got further and further away from the blue line, and you got a reversal. And same thing down here. If you look, this huge divergence, and look, the market's going up. So I think basically the long-term speculation on the U.S. Canadian dollar is probably going to be long or bullish. There's the other thing. You can just click on the sentiment, and you can give you a cheat. Like click it, turn it back on. It's basically the same thing I just told you. And look, basically we got 30, mostly a bullish bias. But you can do the same thing on your own home computer, and you actually can build an EA doing it. How I would use this is just an overlay. Like, so if you're right here, if we're within here, and we still have this divergence, I'd still be long this whole time. So each week, you know, just the daily chart is what it is. So from the daily point to be long. So you just have an overlay. If you have like a long position where you're like, oh, I'm going to buy the U.S. Canadian dollar, and then use it as an overlay. You go in there and you're like, okay, well, I got my PTS set up and on a fib level, and then I looked up to 2 hour, and it looks like I'm on, like a good position still for long, and then you come back and COT, and it's even better for long. That's more overlay. It gives you higher percent chance of your trade. I think that's the basics of it. I go on, and it's kind of a lot to take in at once, but just check out these websites. Read up on it on your own, and I hope you enjoyed. And